Hello friends, a very good afternoon to all. I welcome you in another session with CA Pushpender Dikshit ji. Firstly friends, I welcome you all on behalf of Association of Professionals. Friends, as you know that tomorrow morning we have one session on financial planning and wealth creation. Now it's the time to utilize your wealth and create some goodwill over that. So friends, today's session, in this session, we will discuss treatment of goodwill as per Income Tax Act 1961. So friends, we will try to cover each and everything about the goodwill. It starts from the meaning, it starts from the depreciation, it starts from the acquisition, ki how goodwill created in the books, and we will also cover some case law, which will definitely give edge to our all these facts which we are going to discuss in today's session. So friends, as we all know that somehow goodwill is one of the area which is very dicey, and especially the depreciation part, whether goodwill is depreciable asset or not. Somehow we have studied it theoretically that goodwill is not a depreciable asset, and somehow we have firm belief how depreciation can be allowed on goodwill. So friends, somehow this issue require lots of deliberation because recently some case law comes which establish that depreciation is allowable and some say depreciation is not allowable. So this is one of the area because generally in books of accounts of assessees clients the amount of goodwill are very huge. So therefore tax rate is around 25%, 30%. It's always very material for the assessees to check whether it is depreciable asset or not. We will try in today's session to explain you each and everything about the goodwill so that you all have a better understanding. Friends, we will start this session with one of the disclaimer that kindly use the knowledge whatever gain in this session be utilized by checking proper fact from the legal books so that there will be no injury, no financial loss to your asset clients and yourself also. So this is our standard disclaimer. Kindly use this knowledge in an appropriate case-to-case basis. We are not responsible for any kind of loss because we are doing this session for the knowledge enhancement and for the purpose of serving the society at large. Therefore, I request you all check the effect of each and every case before implementing this thing in your client case. So friends, I am also going to request kindly ask your question in the comment section and we will try to provide you link of today's PPT in the comment section so that you can download it from there directly post session. And friends, I will do one request. Kindly like this session, subscribe our channel so that you can get the information of upcoming sessions. We have already more than 70 sessions for you. You can watch the sessions and share session with your other friends also. Our ultimate purpose to share knowledge. So friends, today we have, as I told you, CA Pushpender Dikshit ji, who has a very good exposure and experience in the field of direct and indirect taxes. In last time, he was discussing with us case law of NDTV, which comes as per section 148 of Income Tax Act. We have also discussed some other case law. So he's a very good friend of me. So whenever I requested him, he always accepted our invitation and used his valuable time with us. I requested him to discuss on this important topic, and he accepted our invitation. So although this area is require lots of deliberation, but started the deliberation with today's session, and let's explore things. Friends, if you have any other view on this point, you can also mention in the comment section. We will happy to take your view and deliberate on this session because next 1 hour we are here to discuss on this topic. In post session also you can mention your comments and we'll try to do some research over that and try to revert you. I think Pushpa Rishi did not require any kind of introduction because he is already taken 2 sessions with us, more than 2 sessions with us. So he is a very well-known speaker. Currently, he is working with one of the listed company which deal in the entertainment industry. So I think he has an experience of around more than 15 years in taxation part. So I think he is not require further introduction because if we go into the depth of his introduction, it will take more and more time, and we want to utilize our time in a learning part. So some other day we will have another session on his introduction only. So today we start our formal session. So thank you, Vishwendraji, for coming on this platform, and I welcome you. So
Thank you. Thank you, Sangam.
kindly take
Am
this
I
session
audible?
forward and
Am I,
enlightening us
am,
with the treatment of goodwill as per Income Tax Act. Over to you.
yeah. Thank you, Sangam. Am I audible?
Yes, you are audible.
Okay. Hello, friends. Good evening to all of you, whosoever is logged on, and also to those who will be seeing us, watching us, and streaming offline also. Sangam rightly mentioned that the very purpose of getting on this platform is just to share knowledge, share our personal, opinion about a particular subject, and that too when you got to have a practical hands-on experience on that area. So you always try to share your practical side of that particular topic along with the legal provisions. And rightly said so, Sangam, that opinion and points expressed over this platform is again needs to be seen with the caution and to be used with proper guidance, because it differs from fact to fact, and taxation is all about factual things. You need to see your facts pattern and then you have to apply the law. So very good disclaimer, Sangam. And the idea of learning should never die. And in continuance to that practice, we'll today delve into the goodwill. Goodwill, the meaning, goodwill, the reason, goodwill, the way of business, the way of life, and also the very critical and decision making point in business mergers and acquisitions, business takeovers, all those things. Because in general, whenever there are big business takeovers, mergers, slum sale, etc., the quantum involved is huge. And whenever a businessman agrees to pay delta or the extra money than what is apparent through assets and liabilities, or the net assets of a prospective company, is that the goodwill or the future possibility of that line of business to fetch revenue, fetch customers, fetch reputation, all those things. So with that, let's try straight away get into the slides and start the topic. So slide is visible, Sangam.
Not yet, sir.
All right. So should we start?
Yeah, yeah, please.
Okay.
But sir, your slide is
Now
not visible right now.
it's not visible.
Not visible, sir.
Okay, just a minute. Is it visible now?
Yes, it is visible now.
Okay. Thank you. So friends, I deliberately coined the term conundrum for the topic, that the conundrum on goodwill treatment under IT Act. Conundrum refers to the uncertainty with respect to various fact patterns that each and every case involves. Although there has been a lot of development in terms of understanding of the concept, in terms of the Supreme Court decision in the matter, which more or less firmed up the position that goodwill is something which is intangible asset and eligible for depreciation. That much so has been found by the Supreme Court decision in the case of Smit Securities uh, Limited. But again, there are a lot of slips between the cup and the lip, because there are so many variables, so many facts which are relevant to be considered to finally take a decision whether this particular goodwill which has arisen is subject to tax depreciation, and whether there is any eligibility for tax depreciation. Is it actual transaction, or is it just a fair valuation of existing assets, and the difference has been deliberately created to name it as goodwill and camouflage or the legal provisions. So it will be interesting journey. Let's delve into it. Goodwill. The term goodwill has not been divided in the Income Tax Act. It has been, described in several judicial pronouncements. Like normally, Section 2 of Income Tax Act defines or each and every concept that has been talked about, but goodwill has not been defined in the Act. So whenever we have to understand goodwill, we have to take assistance of other jurisprudence case laws where the term goodwill has been dealt with. So I have tried to capture those things. So in general, we call when someone acquires a business as a going concern, and purchase consideration paid for the business is more than the net assets acquired. That is when you agree to pay more than what is the net value of assets and liabilities of the prospective company. The difference is recognized as goodwill in accounting in books. Also, in Ind-AS 103 business combination, it says goodwill is an asset representing future economic benefits arising from other assets acquired in a business combination, which are not individually identified and separately recognized. But it definitely represents the future economic benefits, which is the key term. Somebody may ask, why would I pay more than what is the value or what is the net assets I can see in the business of a seller? Obviously, there could be two driving factors which will make you to pay more than what is apparent. Because goodwill is the future market. Goodwill is the extra premium. Goodwill is the extra money that a buyer or the prospective customer would want to pay you in comparison to other products. So two reasons why you want to pay more. Value of business can be greater than the sum of fair value of assets. Second, the more important one, the synergies, the cost savings, or the future economic benefits that you can expect for your business, which are not in tangible form, but you can very well estimate if that particular brand, if that particular customer, if that particular license, if that particular way of doing businesses is in your periphery, then you can definitely take an edge from your competitors and you will do wonders in your business. Goodwill is typically represented through the target company's brand equity, brand identity, stable client base, customer relationships, employee relation, advanced technologies, which is very key factor. When IT company takes over another small or mediocre IT company, they always end up paying more than what apparent value of that small or mediocre IT company looks at. Typically 500, 200 to 500 people are there in small medium IT company. But when a big company acquires a small IT company, they always look at the technology they are working on, and if they can harness that technology to the betterment of their overall growth. So again, advanced technology is very critical. Goodwill tested in books, accounting terms. Goodwill is tested for impairment in books. Earlier, under IGAP, it used to be amortized year on year, but under Ind-AS, it is tested for impairment year on year. Important thing is that goodwill, internally generated goodwill, is not to be recognized as an asset in books of account. It is only the goodwill which you have paid for, means a third party business or an external business which you want to acquire, and the benefits which you anticipate through that transaction, and the difference between net assets and the actual payment purchase consideration is the goodwill, and that needs to be recognized in your books. Business acquisition, slump sale. You may acquire a particular division of a business. You may not want to acquire the entire entity, but a particular division of that business. Let's say uh, this product, a particular product division, not all the products, but a particular product division.
सर मैं आपको डिस्टर्ब कर रहा हूँ सर, एक बार थोड़ी सी ना आपकी ना सर इसमें डिस्टर्बेंस आ रही है सर, तो आई थिंक आपके हेडफोन में, तो आई थिंक इसको ऊपर नीचे करेंगे या फिर निकाल के दोबारा लगाएंगे सर एक बार आप।
Is it better?
हाँ सर, बेस्ट है सर अब तो।
Okay. Thank
बेस्ट
you,
है।
Sangam. So again, we are continuing with the concept of the goodwill. First, let us understand, and then we'll get into the tax treatment thereof. Now, business acquisition slump sale is one of the way you acquire a division of a future prospective company. It refers to acquisition of a business on a going concern basis for lump sum consideration, where no separate value is being assigned to assets and liabilities. And assets and liabilities which are acquired pursuant to slump sale
are recorded in books of the acquirer basis the PPA method, which is purchase price allocation report obtained from the independent valuer, and the excess of consideration paid over that net asset which is recognized is called goodwill in the books of acquirer. So that is one way of doing transaction for your future business growth. You don't want to acquire the entire entity of the external company, but you are interested only in a particular division of that business. So you negotiate for that division as a going concern basis without individually attributing value. That is called slump purchase. Amalgamation, in this case, that is another way of doing this future mergers and acquisitions. Amalgamation is the way in which goodwill represents the excess consideration paid by the transferee company, which is the company which intends to acquire that company, to the shareholders of the transferor company, that is the amalgamating company, over and above the value of net assets of the transferor company. So again, the difference of net assets over the purchase consideration is represented by goodwill. In days 103, we have already spoken about that goodwill is something which represents the future benefits, economic benefits arising out of that business. That's why one would agree to pay more than the net assets of prospective business. In Income Tax Act, Section 32, subsection 1 to I talks about depreciation, and in that they have also imbibed the term intangible, and they have delved on what do we mean by intangibles. So intangible assets they have described being know-how, patents, copyrights, trademarks, licenses, franchises, or any other business or commercial rights of a similar nature at the prescribed percentage. In income tax, they have given 25% as the depreciation rate for intangible. And they have also categorically mentioned the nature of assets which will be construed as intangible, and they have also mentioned or any other business or commercial rights of a similar nature. That is the term which has been used in the act. Now that is very interesting to know that this particular terminology of any other business or commercial rights of a similar nature was used heavily by the Supreme Court in the monumental decision in the case of Smit Securities Limited, where the Supreme Court has used the principle of adjustus generis, like of the same genre, of the same kind, and they interpreted that if the goodwill is having the values intangible in nature, which could be your customer relationship, which could be your licenses, which could be your customer base, which could be your unique logistic network, which could be your logo, which could be your brand, all those things. So these will also, and therefore goodwill should also be in the nature of intangible, falling under section 32 of the Income Tax Act, and it should be subject to depreciation. We'll get into more detail about Supreme Court, but I'm just touching the connect that any other business or commercial right was looked into by the Supreme Court, and they referred to this particular comparison that if earlier category like know-how, patent, copyrights, if the same kind of intangibles are included in the term goodwill, for which we have paid extra than the net asset of the business being acquired, yes, it is a goodwill and it is intangible.
Okay.
Okay.
Pushpendra sir, if going forward, we discuss one point that somehow how to authenticate the value of goodwill in the books of accounts, because somehow the value of goodwill is between the MOU between two parties. So it is very difficult for the tax department to authenticate the value of goodwill. So kindly put some line over it. I think it is one of the
Yeah,
area of dispute.
yeah, definitely. Because please understand that when two parties across the table enter into a transaction for acquisition or for sale, then number one thing is that they are unrelated party. Number
Yeah.
two thing is that there will not be any motive for between the unrelated party to camouflage the pricing. Number three, the price will have an independent valuer also. Accounting also requires you to have an independent valuer report and apply that purchase price method of allocating. So I think how much price is agreed between two parties for a particular business division or particular legal entity is purely, subject matter and prerogative of two parties. No tax authorities will get into it. Now, where the question of goodwill arises is how much you have gotten out of what you have paid. For example, if I have paid 500 crore rupees, and in turn I am getting an assets and liabilities from that future business or entity worth net worth rupees 350. So I have paid 500 rupees, but I have received only 350 rupees value of net worth. Now 150 is what? It is my goodwill. That is how the goodwill is arrived. Again, companies also revalue the assets which are acquired in a merger because of that 103 business combination. But then there is a caveat also which I will talk about in section 32 subsection proviso 5, which says that depreciation on any asset which was earlier being used by a transferee company to the transfer company, the depreciation on an existing asset cannot exceed, by virtue of this merger. I mean, it cannot exceed otherwise if that merger had not taken place. So, an asset which was of rupees 100 in the books of a transferee company, transferor company, and that asset is, revalued at 150 rupees in the books of transferor company, transferee company. Then even if he revalues that 100 rupees asset to 150, but the depreciation will be restricted to the written down value that was there in the hands of the original owner. That is proviso 5 to section 32. So to that extent, act already places an embargo that you cannot claim depreciation even if you revalue the assets. And also there is a section 43 subsection 1 which talks about the cost, that what will be the cost of an asset which has already been used in the business earlier. There also, if assessing officer finds that the revaluation done by you in the scheme of merger is excessively wrong, then he has the authority to reassess or even revalue the fair value. So these are the two controls which are there in the act. So one is accounting, one is eligibility to take depreciation, and the amount of goodwill depreciation. We'll get into more as we progress. Okay. Smith Securities Limited is a hallmark decision of Supreme Court in the matter of goodwill depreciation. Prior to this case law, companies used to understand intangible assets in the name of patents, copyrights, trademark, licenses, as are categorically mentioned in section 32. And even the stock exchange membership was considered as eligible intangible asset because it was having a future value and it can be transferred also for a consideration. So if stock exchange membership has met this criteria, then the case was decided in the favor of assessee. Nonetheless, the landmark decision of Smith Securities paved the way for goodwill depreciation in many cases, except where the fact pattern is different. I'll get into that, where that Smith Security was not followed because the fact pattern were not same as were in the case of Smith Security. Now, let's understand what was the matter before the Supreme Court in the case of Smith Security, which is a landmark decision and still being followed at multiple forums, and assessee have been getting major relief by quoting the Smith Securities Limited Supreme Court case law decided in 2012. Although the decision was not very detailed one, non-speaking, but it actually ended up saying that goodwill is a asset which is eligible for depreciation. That was made clear in that decision. Okay. Now the background is YSN Share Security Private Limited amalgamated with the assessee in accordance with the scheme of amalgamation sanctioned by Bombay and Calcutta High Courts, respectively. The excess consideration paid over the value of net assets acquired from YSN was considered as goodwill. arising on amalgamation. Accordingly, depreciation was claimed on that goodwill. Assessee acquired a capital right in the form of goodwill because which the market worth of the assessee increased. Again, why you would pay more than what is the net assets of acquiring company is that you expect to see future market worth or synergies or the economic benefits by paying extra. Because of that benefits which are accruing to you in the form of goodwill, you pay it. Now the matter traveled to assessing officer. Assessing officer disallowed the assessee's claim on the ground that goodwill was not an asset. Under explanation to section 332 subsection 1b, AO contended that no amount was actually paid on account of goodwill. The same was upheld by Commissioner of Income Tax also. And tribunal, when matter went to tribunal, by holding that the difference between the cost of an asset and the amount paid constituted goodwill. So goodwill, they said that goodwill is an intangible asset in terms of explanation through 3 to section 32 of the act. When tribunal decided in the favor of assessee, then revenue appealed before the Honorable Calcutta High Court. Calcutta High Court, when heard the matter, it rejected the department's contention and upheld the decision of the tribunal. So accordingly, Revenue Department appealed before the Supreme Court again of the decision of High Court. So I think tribunal, High Court, both concluded in the favor of assessee that excess consideration paid for is goodwill and eligible for depreciation. Issue which was before the Supreme Court was whether goodwill is an asset within the meaning of section 32 of the Act, and whether depreciation on goodwill is allowable under the relevant section. These were the questions which were put before the Supreme Court to be tested and adjudicated. And revenue's contention was that goodwill is not covered within the category of intangible assets defined by explanation 3 to section 32. I was talking about that term goodwill has not been defined in the Act, has not been separately mentioned. And even in this case also, how goodwill has come by, I'll just tell you that any other business or commercial rights of a similar nature, that was the term mentioned in section 32. And Supreme Court, by using the principle of adjudicating generis interpretation, they relied and said goodwill represents rights which are intangible in nature and should be eligible for depreciation. Supreme Court finding is, I was telling you the principle of adjudicating generis should strictly apply while interpreting the expression any other business or commercial rights of a similar nature. 2. Goodwill is covered by the expression any other business or commercial rights of a similar nature. Hence, goodwill is an asset in terms of explanation 3 to section 32. So, Supreme Court upheld that goodwill is a asset eligible for depreciation. That was decided in the favor of the assessee and against the revenue. And that has been very celebrated case, and lot many assessees have gotten favorable decision based on this, provided the fact pattern was matching. That is, the goodwill was resulting through the actual excess money paid. That is, goodwill was resulting through the third party purchase. That is, goodwill was not the internally or self generated goodwill. After this Supreme Court case laws, I think like this Supreme Court case laws, lot many cases have been decided in the favor of assessee, including this tribunals, High Court decisions, including this Delhi High Court in the case of Ariva T&D India Limited, Hindustan Coca-Cola Beverages also, AP Paper Mills, Hyderabad Tribunal. So these all cases were decided after this Supreme Court case, and they are in the favor of assessee only, including the one which I am talking about, the Hyderabad bench of tribunal in the case of Mylan Laboratories, where honorable tribunal observed that goodwill on which the taxpayer claimed depreciation is not only self-generated goodwill, but the taxpayer had acquired the shares of its subsidiaries from an unrelated party. And very interesting principle which was laid down that, and it distinguished the United Brewery. I will talk about that, the negative case after the Supreme Court decision, and which is yet to be decided at higher forum, that they said that you need to distinguish between the two transactions: amalgamation in the nature of merger, amalgamation in the nature of purchase. If amalgamation is in the nature of merger, that is two existing subsidiaries are being merged and revalued, and there is a goodwill because of the revaluation, that is not eligible for depreciation. But in case of amalgamation in the nature of purchases, which was the case in case of Milan Laboratories, assessee is eligible for the tax depreciation on goodwill. So now I'll talk about the negative decision in the case of United Breweries, which is a lot of which has received a lot of attention, and it is distinguished from the Supreme Court case due to its fact patterns. United Breweries case law is decided by the Honorable Tribunal, Bangalore Tribunal, in 2016. The case background is like this. Assessee United Breweries is engaged in the business of production and sale of beer. Assessee amalgamated its subsidiaries and assessed claimed depreciation of rupees 15.57 crore on goodwill, and the value of the goodwill stood in its books was 62.3 crore due for the assessment year 2008-2009. Goodwill was shown as a result of amalgamation of its subsidiary KBDL, uh, and the purchase consideration was 180.52 crore, and the exceeded fair value of its tangible assets, and they called it as a goodwill, and claimed depreciation on that goodwill. But that was not allowed by the assessing officer, and the issue traveled before the tribunal regarding this disallowance of the claim of depreciation on the condition of its valuation. Assessee pleaded that matter is duly covered by the Supreme Court ruling in the matter of Smit Securities Limited, but tribunal distinguished this case on the basis of fact pattern of this case, that principle of goodwill depreciation and the case decided by the Supreme Court, the two cannot be compared because of the difference of fact pattern. Now, ITAT observations were like these. All the assets transferred were already used by the subsidiary, which is KBDL. There was no new asset. Assets were being used due to amalgamation, and thus, AO's verification in light of explanation 3 to section 43(1). I was telling you that Income Tax Act has got two conditions, two riders, two embargoes in the form of, ensuring that there are no misuses of the concept. Section proviso 5 to section 32 subsection 1 talks about that in case amalgamation is taking place, then the asset which is already in use, the depreciation on that particular asset cannot exceed the total depreciation, and it has to be spread between the two amalgamated and amalgamating company in the nature of in the ratio of number of days. So number one, that depreciation cannot exceed the otherwise eligible depreciation as if no merger or amalgamation had taken place. That is a rider by proviso number 5 to section 32. And again, explanation 3 to section 43(1) talks about the cost of an asset. And if an asset is already in use and picked up by the assessee in a business, then assessing officer, if he believes that a value assigned is higher side to claim the excess depreciation, then assessee officer has the power to revalue that asset. And the same was done here. In KBDL's books, of value of the books was 7.5 crore, 7.45 crore. I mean, even before the amalgamation of the two companies, subsidiary and the parent, already there was a goodwill in the KBDL's book of rupees 7.45 crore. The value of this goodwill was enhanced to 62.3 crore because of this amalgamation and revaluation. That is what being questioned, and they also said that here the fact pattern of the case is not at par with the Smit Securities. Depreciation on the enhanced cost of goodwill in case of amalgamation should be restricted in the hands of amalgamated company only to the extent as apportioned between the amalgamating and amalgamated company in the ratio of number of days for which asset is used, as if amalgamation did not take place. So once the claim of depreciation stood restricted, the valuation issue becomes irrelevant. So even if one doesn't get into the revaluation number, the proviso 5 to section 35 restricts the eligibility to claim depreciation on any asset. Just because you have done a merger and you have revalued because of the requirement of India's 103 business combination, it doesn't mean that you are eligible to take goodwill depreciation on enhanced value of asset. Your depreciation is subjected only to the extent as if that revaluation that merger hadn't taken place. Amalgamation falls outside of purview of capital gain because section 47 specifically talks about that if if there is a merger or amalgamation, then assets, if the assets are being transferred, then there will not be any capital gain. It is there, but it will be exempted. Then while because assessee also contended that my fact pattern is similar to Smit Securities, so I should be given relief and my depreciation or that enhanced goodwill of 62.3 crore should be allowed. On that question, Honorable Tribunal said that Smith Security decision is different because there was not self-generated goodwill, and would not be that proviso 5th to section 32 answered the disallowance by the assessing officer, and the answer was in the favor of revenue and against the assessee. So it is very important to see your fact pattern before you go ahead and claim depreciation under depreciation on goodwill recorded in your books of accounts. A, that goodwill should be the reason of excess money paid for acquiring some future business rights. B, it should not be the self-generated goodwill. Goodwill is already sitting in your books. Now you are revaluing and claiming depreciation by camouflaging facts. No. These are the checks and balances we have to maintain. And then the rider of 5th proviso to section 32 and explanation 3 to section 43(1). These are the embargoes and riders that you have to be carefully reading in your fact pattern case. Then only you should go ahead and claim.
Sir, one question is very important to understand this depreciation allowable on goodwill, sir. What is the treatment in the hand of recipient? The person who is amalgamating in one company, the person who is receiving consideration in the name of goodwill. What is the tax treatment in his hand?
No. So he will to have not goodwill, na. He is selling his business.
Yes, I
He will
understand. I understand. It will be treated as capital receipt in his
yeah.
hand.
That will
Okay.
be seen that like what will be the income, capital gain, 20% TDS, those will be the things. But when you are acquiring some assets or a division, that you
Yeah.
will assign values to assets and liabilities which you are acquiring through this new transaction, and then you will also amalgamate these two because you want to have a one company for the reason of economy of scale, and avoiding repetition of transactions. Multiple activities can be consolidated into one entity. Typically, amalgamation takes place. First you acquire a third party company through investing into its shares or through buyouts, more than 50%. Later on you increase your investment. Once you have 100% or above 50%, you would want to consolidate that as a merger. These are the things. And at that time of merger, you have to revalue your assets and liabilities to fair value, and then you have to carefully evaluate what is the eligible depreciation on the asset. Just because you have fair valued your assets, that does not mean you should override the provisions of explanation 3 to section 43 or proviso 5 to section 32.
Okay.
And the
Pushpendra
same thing
sir. Yeah. Please.
same thing was mentioned here in the case of Hyderabad Tribunal of Milan Laboratories. They said that particular goodwill which is being talked about is not a self-generated one. It has resulted out of amalgamation in the nature of purchase, not in the nature of merger. And they have paid money for it, and they have acquired some future rights. It should be eligible. Whereas United Breweries, there was already a goodwill of 7.5 crore, 4-5 crore in the books, and it was amalgamated. The two companies were merged into one and revalued, and the goodwill of 7.45 was revalued at 62 point something, and then depreciation was being claimed. And also the reliance was placed on Smit Securities Supreme Court case law that goodwill is depreciation, and any value, anything which is mentioned as goodwill in books should be eligible for depreciation. So against that, Honorable Bangalore Tribunal said no, the fact patterns are different. We don't allow it. And now the matter is traveling, at a higher forum, and we'll get to see what is the outcome as the time passes.
Okay. Okay.
So I think as long as the goodwill is not self-generated, as long as the goodwill depreciation is on the correct value, we are seeing a lot of SSC pro decisions of late. Lot of favorable decisions are coming. Tax authorities are all cooperating and giving favorable decision in the favor of SSEs only. On the basis of Supreme Court decision. And the one which I am going to talk about is a recent one of Mumbai Tribunal in the case of this Classic Strips Private Limited, which was again a case of amalgamation. That this Classic Strips Private Limited engaged in the business of manufacturing of self-printed adhesive stripes, labels, etc., and advertising material. Excuse me. The scheme of merger under the Companies Act was approved by the Bombay High Court. In accordance with the sanction of scheme, assets and liabilities of this safety division was merged another company with the name of FSPL. Right, FSPL safety division were merged in the books of the assessee CSPL, which is Classic Stripes Private Limited, and shares were consolidated. The resultant difference between the book value of net assets of the seller company and the face value equity shares issued was credited to reserves. I mean, this was the kind of language which was there in the scheme of arrangement, that if the difference between assets and liabilities is negative, it will form part of general reserve. If the difference between net assets and the price paid is positive, then it will be termed as goodwill. In the process, goodwill worth rupees 18 crore got generated on merger of loss-making unit of SSPL. And another interesting point in this case was that SSE even didn't claim the goodwill depreciation in its original return. Some tax consultant like Sangam would have consulted and advised that, boss, this is a claim that you are foregoing, and you have a strong case to claim this tax depreciation on goodwill. And probably due to that reason only, they examined the position and they claimed their depreciation on goodwill before the assessment proceedings, not at the time of filing tax return. Even the time to revise tax return was gone. Now the AO allegation and CIT concurrence. AO alleged that this FSPL is a loss-making division. Goodwill means reputation of the business. And I am not sure, like assessing officer was saying, that I am not sure how a loss-making division will bring advantage of reputation and brand to the acquirer business of the assessee. Assessing officer denied depreciation by saying that it is a self-generated goodwill, and also alleged that the whatever commercial benefit arisen out of this transaction has already been concluded in the very year, and he didn't agree with the claim of depreciation on merits, and same was concurred by the commissioner appeal, that no, you are not eligible for the depreciation for these many reasons. The matter traveled before the Mumbai Tribunal, and while adjudicating in the matter, Mumbai Tribunal got into the details of the facts and said the tribunal examined post-merger accounting entries to ascertain treatment of goodwill, and also held whether a unit is incurring losses or not has no bearing on the existence of goodwill. Goodwill arisen on account of various factors, that is, continuing clients, continuing business relationship, established setup for smooth conduct of business, commercial and industrial rights, licenses to the successor company or merged entity. So these are the driving forces. If entity is incurring losses, that does not mean it is because of its relationships and future potential to earn profits. It is because of some other reasons also. And relying on the decision in the case of Apex Court of Messrs. Smith Securities, Tribunal held that the difference between amount paid and the cost of shares in an amalgamation scheme was an asset eligible for depreciation under Section 32. Tribunal also mentioned that assessee is entitled for depreciation on these capital assets on recurring basis, that is year-on-year basis, on written down value. And very recently, there was a Delhi ITAT also in the case of GODs overseas. Again, it was a case of slump sale, and the same fact. If you have paid, a price to acquire a particular division of a future business, and the assets and liabilities received out of that transaction, shortfall of the actual money paid, the difference is nothing but that goodwill, and that goodwill is eligible for depreciation. So these are the various fact patterns I am telling. There are positives. Then you have United Breweries also, which distinguishes the fact patterns of the Smith Security, and is up for the higher authorities to deliberate and come out with the findings. As far as the position till date is concerned, the situation is that allowability of goodwill depreciation, it is a matter of debate before courts and tribunals till the goodwill is defined. And I mean, right now, basis the jurisprudence, we are seeing both positive and negative decisions. Smith Security is a positive one, but then Smith Security is a non-speaking order. It doesn't have the minute details. For example, Smith Security simply says that goodwill is a tax depreciable assets, but Smith Security does not delve into that goodwill to become a depreciable should have what does it actually contain. One has to establish. If you are claiming goodwill depreciation, then you have to establish that what is that extra money you have paid for. Sometimes it may so happen that you may mistake by paying extra than what you expect the value. You have to establish that what extra benefit you are anticipating by paying extra money. So that delta should not be just named as goodwill, it should also have the intangible assets which should be valued. So a lot of companies go for valuation of that goodwill for the purpose of assessments, etc. Practically, I have seen, I have also handled a couple of goodwill cases practically, and the assessing officer gets into the detail and assessment and that valuation of goodwill also. So the matter seems to appear no pro assessee post famous Supreme Court decision. But again, it is important that we need to have a clear-cut understanding, and that legislature should provide clarity on the merits of open points. For example, that goodwill should not be self-generated. Goodwill should be actually reflecting intangibles in the nature of patent, trademark, copyrights, or of the like nature. See that the fair value of that goodwill, I mean, the fifth proviso to section 32, explanation 3 to section 43(1). So these all are, the pointers which have been picked up by the various judicial pronouncements. But to firm up the position, it is very important for the legislatures to, bring it in black and white and get the certainty on the matter. So before claiming our claim on goodwill depreciation, we must check our facts, and we must have valuation of that goodwill, which is what we are claiming that we have paid extra money for, and that's how we can strengthen our case and chances of winning at the tribunal at higher level.
Okay. Pushpin sir, I want to add some thought on this topic here. That while dealing with the department, generally what they feel and how they tackle the accounts, if you expend something and it become the income of other person and that person is paid the tax, it's a simple calculation they are following. And if they're the amount which you are paying to other person and other person is not offered for tax for any reason, so somehow they generally doubt the transaction and try to disallow our transaction also. So in a similar fashion, when we talk about the goodwill, so in the case of slum sale, So slum sale include the complete all the assets are including goodwill. In that case, that is taxable as a short term or long term based upon the asset majority of the asset and the not the majority for any asset who is long term. So then complete consideration out of slum sale will be treated as a long term consideration. Am I right?
No, no, I just missed last one. Last one.
Yeah.
What you said in case of slum sale?
In case of slum sale, the value of goodwill and the value of the business both are included in the consideration amount. So
Absolutely. Yeah,
in that case,
absolutely.
it is taxable as a long term or short term in the hand of the in the hand of the amalgamating company, the company who is going to be exit. Okay. And the treatment in slum sale, like the asset, if any asset is long term, then complete slum sale consideration treated as a long term consideration. Okay. So, are you getting me, sir?
No, no, I'm getting, but I'm just trying to think aloud in terms of how is it going to impact the buyer.
Yeah, I'm saying because generally when we deal with the department thinks that whatever amount I have paid, it should be the income of the recipient first. If it is not the income of the recipient, then it tries to disallow my expenditure because somehow it not become the income. If in case of aggravation, it becomes the capital receipt in the hand of the recipient, then really it is difficult for the department to allow me as an expenditure. I'm talking about the practical approach. Somehow case law and theoretical part is somehow good, but I'm talking about the practical approach which department follows. So knowing the actual fact how it is taxable in the hand of recipient is very important. So can you put some light over it?
See what happens in case of that slum sale or slum purchase transaction. It has been very well covered in section 50 of the act, and talks about that in case of depreciable assets, the written down value that you have to consider. In case of non-depreciable, that the I mean, in case of non-depreciable, then you have to see the value which is there in the books. And that's how you have to record. I mean, I have a limited view of how you are recording in your books, because I don't have the visibility at times. I may
Okay.
have the idea, but I may not be having 100% visibility of how will you be treating in your books. I mean, I to my mind, the two should not be correlated.
Okay.
And I mean, as far as the slum sale is concerned, slum purchase is concerned, the jurisprudence is very clear. There is no iota of doubt that if I have paid, let's say, 500 rupees for a bundle, let's assume it this way: I have paid rupees 500 for acquiring a bundle, and that bundle, if I unlock, I get some assets, some liabilities, and I record those assets and liabilities as per the provisions of the act. If depreciable, written down value; if non-depreciable, at cost. And the delta between what I have paid for that bundle and what I have gotten out of that bundle is, could be a reserve, could be a goodwill.
Yes.
Now there is no iota of doubt that I have paid for it. It is not and number two, that I have reasons why I have paid more than what I am getting, because I see business potential. I see some brand value. For example, in my own organization also, we do a lot of kind of things. But again, these are business considerations. A businessman is very prudent, and he businessman can foresee 5 years, 10 years ahead of time. And they also do a lot of feasibility study, etc. And once they are convinced that deal makes a sense, then only they invest into it. So what assessing officer is taking a view of the other side of the transaction, to my mind, it should not be linked with the treatment of goodwill.
Okay.
That's my view.
Pushpendra, we got one question from our participant. I have written this question in the chat box. The person is Mr. Vishal Kumar Manchanda. He speaks that amalgamation merger, goodwill is not allowed as a new entity will appear. Its fair value of all assets shall be appear in the books of for IT purpose. Its cost price asset will be amortized. Section 32. No question of goodwill arises. Can you check it?
Yeah, yeah. I mean, in that case, this question of, I mean, in the case of Smith Security, Smith Security was what? It was a case of amalgamation only, na?
Yes.
Amalgamation is what? First you acquire a third party company, and then you merge into your business. And obviously, merger is driven by the concepts of 103 India's business combination, where you tend to do valuation, you tend to do fair valuation of the assets. Fair valuation of assets is their accounting concept. Now, then there is a condition on you, like how much, what value will be of goodwill for the purpose of tax depreciation, that you have to calculate. Like if you have assigned value of rupees 200 to a asset which is actually you acquired 100 rupees, then you cannot be taking depreciation on that enhanced value. You can only confine depreciation to the value which is there in the books. So India's requirement of fair value does not debar you from claiming the depreciation on goodwill, but the value on which goodwill has to be claimed needs to be taken in consonance with fifth proviso to section 32, which says depreciation can only be claimed on the as if that merger had not taken place. If some asset is 100 rupees already in your books which I am purchasing now, it cannot be 200 rupees. It has to be written down value and then carried forward. So for the purpose of your amalgamation, for the purpose of your merger in days 103, you are fair valuing it, that's fine. But for the purpose of depreciation as per the act, they say it cannot exceed the value as if this merger had not taken place. So you have to go to that value to arrive at your eligibility for goodwill. Rest will be the goodwill, but it will not be tax depreciable goodwill. That is happening practically also, and the Smith Securities case of amalgamation only.
So can we take one small example, sir, to understand this in a clear manner?
Yes, we can understand definitely. For example, I have paid 800 rupees. I have paid 800 rupees to asset to acquire the asset base of 650 rupees,
Okay.
right?
Right.
And then
And
800
just
rupees.
650 rupees is the book value in the books of the goodwill
Ha,
value in the books of assessee.
yeah, so 650 rupees is the net asset, you can say. There is some assets, there is some liabilities, but the net asset which I am getting out of that transaction is 650 rupees. But I have ended up paying 800 rupees for that. And the reason why I have done it, I would have done my due diligence. I would have done my all checks and balances. I am a prudent businessman. I understand my business. I understand my growing potential and all those goals of growing. So I agreed. Now, first I have invested, let's say 60%. First I have invested 65% stake. Thereafter I, said after 1 year, 2 year, I will invest into 100% now. Once you have invested into 100%, you take the approval from the NCLT these days. Earlier it was Honorable High Court of, for 394, 395, I think. Of late, NCLT is the body which gives you the due approval. So you take the approval from the NCLT for the merger, and then you do merger accounting. So transaction was already happened. You have acquired a subsidiary which is not merged into your business, but you have acquired. And you have paid 800 rupees, you have gotten 650 rupees. You know that 150 is what? Goodwill. So actually this 150 is goodwill. Now, when these 800 rupees are recorded in your books for the purpose of India's 103, maybe goodwill could be 300 rupees because your 650 could be 800. Maybe 650 could be your lesser than that, or maybe higher. So, but your claim cannot be, as per your India's valuation. It has to be as per the Income Tax Act.
Okay.
So in my example, 150 was the eligibility. If, for example, if you do fair value and you devalue some assets or some liabilities or some assets for that matter, then your difference could be 300 rupees. As per amalgamation, the difference between the assets and liabilities, the goodwill is turned out to 300 rupees. But when you invested into subsidiary, you paid 800, got the worth of 650, the goodwill is 150 rupees. So just by amalgamating the two, you cannot claim undue, goodwill depreciation for the sake of fair valuation concept of the accounting, which is accounting concept. But what I am doing is I have, number one, actually paid the money. I have paid more than what I am getting. Why I am paying, I know why I am paying for. That is why I was suggesting that we must have a valuation report, independent valuation report. We do it for India's 103, but at times, big companies also go for a detailed goodwill report wherein they try to even assign value to various assets which are acquired. For example, best practices, uh, permits, licenses, special state treatment in particular area, the technologies, all those things what are there which they expect they have paid for extra, and the value can be assigned, or they can say all these consist or represent goodwill. And during assessment, you can present that report to the assessing officer. So there is no denial. And Supreme Court in the case of Smit Security was only a case of amalgamation, where I was telling you YSN Securities got merged into this company, and it was allowed. But in that Supreme Court decision, it was very crisp and straightforward 2-3 page order. Simply said goodwill is depreciable asset. That's it. But they didn't delve into that goodwill is a depreciable asset, but you have to prove that any other business commercial right, that condition should be fulfilled by you when you are questioned that what goodwill you have paid for. Is it the excess money, or is it representing some future value? That you have to prove. But because of the Supreme Court decision, no officer gets into that. They give you the benefit of doubt. As long as you have paid for it, it is not self generated, you are eligible for the depreciation. But United Breweries case law is a different fact pattern, where goodwill was already in the books of subsidiary. They just revalued and consolidated the business. Then the assessing officer said, how come you can get depreciation? Because you merged the two entity of your own. 7.5 crore goodwill was sitting in your books. Now you rose up to 62 crore, and now you're claiming depreciation of 62 crore. Then you have to tell me why not I should invoke the fifth proviso to section 32, that if an asset is already in use, how come it can be how come it can have a higher value than what it was had there been no merger? And also, when assessing officer believes that you are camouflaging the value of the asset because of the claiming higher depreciation, act gives power to the assessing officer in explanation 3 to section 43 subsection 1, says that he can even reassess the value, or he can even go for zero value. So those are the extreme cases. For a genuine taxpayer, if you have paid money, if you have acquired some rights, more likely than not, chances are that revenue will accept your case. But case should not be like the United Breweries, where they said it should not be self-generated. You have to be knowing your facts. You have paid for money for some acquiring future benefits. Chances are that you will get your benefit. But stakes involved in these cases are very, very high. 300 crore, 500 crore, 600 crores. So you have to be very meticulous and ahead of things. You need to have a good valuation report. You need to have good opinion on your fact patterns, that whether you are missing on something or not, and prepare your case. Especially when you have a government introducing faceless e-assessment, faceless appeal system, it has become all the more important for us to have very well documented submissions, very well documented support papers, that an officer who is looking at your submissions, merely reading those things can identify that you have eligible and valid claim, because you will not get an opportunity to sit across the table and explain the situation and the transaction. So and again, I think this entire faceless thing has to see light of the day. We are looking at it, it is very impressive, but let's see how the things, unveil. If it is done in a right manner, obviously it will be a, paradigm shift, the way we are doing things. Just keeping finger crossed.
Yes, true. I think in a faceless assessment, it is very difficult for assessing officer to provide the benefit of any case law. If you're taking any benefit based upon the case law, I think prima facie it will be denied by the department. Somehow we need to go a tribunal only for getting a benefit, any benefit especially based on the case law. And I think goodwill is one of them, because until unless definition of goodwill is not provided, especially it is not mentioned in the Income Tax Act, so somehow all the jurisprudences are coming from the case law only. So in my personal opinion, it is hard to get the benefit at the first and second level, and third level we definitely get the benefit.
No, I think there is again, I think, a silver lining in that. That the current system of faceless assessment is that the NEAC, that is National E-Assessment Center, will interact with various bodies, and it is going to be a China wall between assessee and the department officers. So even if a assessing unit has got some doubt about the interpretation of technical case law or the claim of the assessee, they have to refer this to technical unit via NEAC. And technical unit, they will be already fed with what is the department position. For example, as far as goodwill is concerned, and if that goodwill is because as per the Supreme Court case, goodwill is an intangible asset, and department is not contesting that. But if your fact pattern is on United Breweries, which has been distinguished from the Supreme Court case law, then department definitely will not give you a clean chit. And because of the fact that quantum involved in these cases are humongous, officers doesn't want to take any chance.
Yes.
If you provide the detailed working, if you provide the detailed reason why your case law is similar to Smith Security, they will not leave it untested.
True. But somehow I feel that I just use take R on this because somehow when we talk about the amalgamation, generally a huge amount of goodwill are there. So somehow it is difficult for the AO level at EAP level to give the
Ah,
benefit,
that is quite
and
possible.
because of
But I'm saying, but I'm saying if department has already accepted the Smith security case, I'm saying if you have your case facts clear and you are able to draw it identically with Smith security, then even assessing officer will have the technical unit will have the instruction that if it is in the nature of Smith
yes,
security clear, you give it, because even government doesn't want to have the litigation. And the basic idea behind introducing this faceless is that to have the fast resolution and less subjectivity,
yes,
dynamic, you call it dynamic assessment, where no one is having any pre-inclination
yes,
that this is for him, this is for her. No, they are just doing their duty, and they are being asked to say anything in writing. Then only the NESC ask for technical unit, or even if NESC is not satisfied, they can go for review unit, and then again the matter travels to another Galaxy AU unit. So it will be really interesting to see how the things unfold,
yes.
and it is very important for professionals like you, Sangam, that you are now getting the platform to be at par with all big fours. Now there is no personality, there is only the writing skills.
Agree, totally agree with
Personality
you.
will be there, but then it will be through video conference in selected cases. But most of the time, clear cut writing, clear cut submissions will get you clear results.
Totally agree with you. Writing
and and
skills,
and, and your area of professional expertise will have expanded to India, pan India. It is
pan-Indian.
no more related to Delhi jurisdiction.
Totally agree with you. Totally agree with your
It is up
opinions.
to your hard work and your dedication, and you can become a master or expert of a particular area, that any matter of your expertise will come to you only, even all across India.
Yes, I am totally
So
agree with you. It
use
is a
this
very good
opportunity.
opportunity for the professional to work in this area because then there is a number of cases will come into litigation also. I am not believing that there will be less litigation because now department have a lots of material to print in the order. So they
Yes,
will
yes.
definitely, and I am also waiting to see first order how the face case assessment will done and how the order will come because somehow saying that the order will come in 10 pages, 8 pages. Let's see how the order will come. That will be a very new thing for all of us to see the order, and
For
let's
even
see.
assessing officers also, it is going to be a testing time.
Yes.
They will also say, I mean, it is
But now I
untested
think
water.
the arms of assessing officer is become so large. He has lots of hands, like technical unit, review unit. So he has lots of hands. So his work should improve at least.
Yes, yes, and they are under tremendous pressure,
Yes.
because you are expected to have the best in class, and whatever you are writing or making a decision, it is being in formal writing.
All right.
It is no the word of mouth. It's everything is in writing. Whatever you need for your assessment unit work, you need to go through proper channel of NEAC and all those things. It will be really interesting. So I mean, the both sides, SSC as well as the tax officials, both are on their toes, and testing time for both, and the professionals like you.
Like us. So thank you very much, sir, for taking a very important topic, goodwill. Somehow it is unexplored in the market. Still, you need more deliberation so that a clear-cut view comes and people will start taking benefit of depreciation or goodwill. So I think that after Supreme Court judgment and today's session, they definitely unlike many members, many professionals to take this courage to take a not always take lenient view, some view which is firm. Like after coming Supreme Court decision, I think nothing is bigger than Supreme Court. So we can have a courage to take the depreciation of goodwill, and we can also litigate this matter at a later stage. So, sir, with this note, thank you very much, Pushpender sir, for giving your valuable time. And really, it is our pleasure to share knowledge with you and getting knowledge from you. And our participant is also feel very happy to pleasure that you come and share knowledge on very important topic, because these topics are generally not available in the market to freely get the informations. Because I also did some Google on the Goodwill, not get the appropriate and concrete things on the Google. So really, this kind of topics really matters, and we wish in future also we will have some this kind of topics which is not common but have a paramount important, because Goodwill is really paramount important, as a quantum is important and judgment is important, and making everything they are all are very important things. So thank you very much, sir. Thank you
Yeah,
very
because
much from
some involved is very huge.
yes,
It
yes.
ranges from 100 crore to 1,000 crore.
Minimum
Yeah.
in every case, yes. Because generally you see in the big four there is separate department or merger and amalgamation company, so they are working day and night for that. So actually amount is so huge, so
Yeah.
it's require more and
And
more
that is where
valuation.
government also is requested to have a certainty on the subject,
Yes, yes.
because now Supreme
I
Court
am
cases
I,
are.
I am fearful that might be government will not any do the retrospective amendment after this case law, because the amount is really very huge.
Yes,
So
but I think that order of Supreme Court is not speaking one. It
yeah,
is
yeah,
only talking about that goodwill is a depreciable asset, but it did not delve into what goodwill should consist of.
yeah.
If you strictly read Section 32, it says that of similar nature. So
Mhm.
just because you have goodwill, you have paid for extra money, you should also convince before the assessing authority that you actually have some intangible nature rights. People assessing officer who understand the matter in detail, they ask for the valuation report also, they get into the nature of benefits you tend to expect. So I think documentation, prepared matter definitely help an assessee to get the relief even at the assessing level also. Because if the fact pattern is similar to Smith Security, even assessing officer has been given the authority to grant it, unless in faceless assessment they have given some earmark, only 100 crore tak you can take a call, and I don't know how the system is working. But I think clear cut documentation, well articulated submission can really pave the way for favorable order and avoid much long drawn litigation.
Definitely, definitely. Totally agree with you, sir. So with this note, sir, we are signing off. Again, thank you very
Yeah,
much, Pushpendra sir, for joining us and sharing your knowledge.
my pleasure.
Yeah.
It's always learning good.
So friends, if you
Take
like the
care.
session, kindly give me a big thumbs up and like our this session and subscribe our channel. And if possible, share with your other friends also. We believe in that knowledge should be shared, and let's make India financial literate also, so that
Yes,
we soon we become developed nation.
yes,
Yeah.
definitely. You are
Thank
doing
you.
a good job, Sangam. My all the best to you.
Thank you, sir. Thank you very much.